Hey traders, Raghee here, and I'm going to show you an alternative way that I was setting up the indices when I did not get a trigger to the short side. Now, a little bit of background. Yesterday in the premium video, one of the things that I mentioned to the traders was that while I do have day-to-day and overall bias to the upside for today's options expiration, of course I'm recording this on Friday, and really going into the last 3 especially, but 8 trading days of this month, I'm going to be looking for, I think we're going to see a lot larger redemption, a lot larger withdrawals, if you will, from retirement accounts, from pensions, and I think we could see some pressure on the market. But that's a little bit in the future. What about today? What was the game plan for today? And the game plan for today was to shelve the bullish bias because of options expiration and my bearishness because of it. $1.8 trillion in options were expiring today. Pretty significant day that I was looking at for the downside. Based on heavily weighted stocks, where open interest was on the put side and the call side, and a lot of different things. But nonetheless, what that got us doing this morning was thinking about ways to short the indices. Now, one of the first things that I ran into was the fact that I had a really nice short setup on the Dow, what I thought would be a really nice short setup on the Dow anyway, as well as the S&P, Russell, and NASDAQ. Now let me show you a few things. Just take a quick note here. Look at the heavily weighted sectors within the Dow. Right? A lot of folks are always surprised that tech is as heavily weighted within the Dow as it is. Healthcare coming in at number 2, and consumer cyclical coming in at number 3, followed by financials, and then followed by industrials. Okay, so again, we're looking at not just the top weighted stocks within the Dow, but the sectors, because the sectors are going to in many ways behave in a similar manner to the indices because they share something very much in common. They're just comprised of stocks. It's just made up thing, literally made up of stocks. So fast forward to this morning in our clearing range breakdown, we're the only one of the 4 indices, Russell, Dow, NASDAQ, S&P. This was the only one that had a clearing range breach, as you can see with this alert. It's a free tool that I make available to members. So this is fine, but it didn't bounce that much. And there's 2 things that I keep in mind. One, well, if I like the short in the YM, why not think about heavily weighted names or heavily weighted sectors within it? If I don't get the opportunity to short the YM, might there be a short, lower risk somewhere else? Might there be a setup on another aspect of the Dow? Now, let's say the Dow did not breach. Right? I could then also look at the individual names. So we might see some weakness, but it just didn't fire off in time. And for those of you that have been following along with the way that I do these breaches, the clearing range, the high-low of the first 30 minutes of the day has to breach by the first hour of the day. And if it doesn't, well then I don't have a breach. But sometimes we'll have breaches in other parts of the market. So let's say I was looking at something on the S&P and I say to myself, well, what are heavily weighted sectors within the S&P? Or what are the heavily weighted sectors within the NASDAQ? Those broader averages that did not give me a breach. Can I take a look at the XLC? Can I take a look at the XLY? Did these breach instead? And sure enough, while the NASDAQ was very choppy and never gave me a breach, neither did XLC, but XLY did. So you might say, okay, well, my alternative to the NAS could be a short in the XLY, the discretionary. So what I'm trying to explain here is basically know your stock weightings, of course, but know your sector weightings and know their corresponding ETFs. And oftentimes, if the underlying index, the one that includes, all these, is not behaving, or you think you've got a directional read, but your setup isn't there, just look for a variation. Look for an alternative, but look for that same setup. And here, the XLY was a really great alternative to the NASDAQ. And these are the kind of things that going into summer, we're going to look at more and more, because I do anticipate more chop. Let's say I'm looking at my bullish bias, as I will be on Monday, and the NASDAQ is either breaking down or not breaking in either direction. I can look for a breach to the upside in the sectors that are heavily weighted within the S&P, NASDAQ, Dow, Russell. I could look at heavily weighted stocks that might be behaving in a way that might be better. That gives me a bullish setup. So there's a lot of things we could look at once we move into next week. But one of the things that I really want to, again, emphasize is most of the time I'm going to be looking for a bullish bias as a day trader. But there are going to be certain days, and this is the first one that we're running into for the remainder of this month, and that is options expiration is bearish. And I want to warn everybody now, last 8 days to 3 days of the month, I think I want everyone to be kind of aware that we could start seeing redemptions and a little bit more strain to the downside, a little bit more pressure on these markets. Have a great weekend, and I'll see you in the next update.